Hello, Maverick traders. This is Rob Reinhold. This is the Market Roundup. October is almost done. Halloween is almost here, and the market is not looking too scary at all. In this session, we're going to be talking about what happened during the day. We're going to take a look at some news. We had some earnings. And of course, we always like to look at potential setups. I've got a bull, I got a bear, I got a sideways for you in this session.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so the market started out fairly flat today, and it plummeted right at the beginning, and then it climbed back. And it climbed back all the way up to basically still a little down on the Dow, but flat on the S&P. The S&P had a little sell-off right at the close. It was up about 0.3%, and then the candle right at the close knocked it down. The Q's up almost a full percent. The Russell is actually trading down today. The 10-year bond yields keep marching higher. They're now up around 4.37, 4.38. Look, that's really high. Small caps are probably going to lag. And we've talked about this phenomenon right here. Large caps tech doing great. Small caps and other stocks being mixed. This is literally what we saw in April, May, and June, and some of July. This is exactly what we saw, and it was frustrating for people. They said the Qs surely can't go up anymore. The Qs at one point were up 48% for the year in June. So it can do it. It did do it. And right now, again, the money's piling into these large cap techs because the interest rates just don't matter to them. It just doesn't matter whatsoever. Where it does matter to a lot of the other companies. If we take a look at just some of the economic reports, we got two reports this morning. We had the JOLTS job numbers are the lowest since 2021. Now let's talk about what that means. This is something the Fed was really watching. At the first of the year, it was over 10 million. They said it's got to come down. These are now coming down maybe a little bit faster than the Fed wants. So this report right here is telling the Fed, well, maybe the job market is a little softer than we want it to be. This is good for future rate cuts, if that's what you want. Then we got consumer confidence spiking to 108, and it's still showing you that yes, even though the job market may not be as strong as we thought previously, people are still feeling really, really good about where the economy is at the moment. We are going to be getting GDP tomorrow morning. It's supposed to come out at 3.1%. That is a very strong economy. And we've actually heard a lot of the CEOs come out and say that this is about as bad as it gets for corporate profits. And from here on out, it's going to be much better. I know there's a lot of doom and gloom. I know I've heard it. I've heard people thinking this economy is terrible. But when you take a look at the numbers, the economy is holding up quite nicely, which is why the market keeps going up. But with that being said, look at this advanced decline line. Yes, it's going up, but it's going up because a small number of stocks are going up, pushing it higher. The rest of the market is actually really, really mixed at the moment. And we can see that in the chart of the S&P. So here is the S&P. You can see we had a pullback, an orderly pullback right to a moving average. But look at these bounces. This is sick. This is a pretty sick bounce. It's holding in. It's doing all right. But remember, we need to talk about where we are. We are literally 1 week away from a presidential election that happens every 4 years. I said I did not expect the market to do much this week. I think that this market is waiting for this election. Then we come over here to the NASDAQ and it says, hold my beer. And NASDAQ has decided to break out. So look, we have to admit that the NASDAQ is showing relative outperformance. If we are going to be making some bullish trades, it should be in the large cap tech space. We got earnings after the bell. They were good earnings. And so this space likely goes higher in the foreseeable future. Take a look at this heat map because this is exactly what I was talking about. If we were to take out tech, yeah, it would have been a pretty bad red day, especially if we took out Google, Meta, and Amazon. If we took out all of those, you can see it would have been a down day for sure. Heavy selling in utilities, heavy selling in energy. There's been some areas that were really sold out pretty hard today, but it was masked by the big gain in technology. The big question, did anything change? The answer is no. The markets are staying above the 20-day moving average, staying above the 50, and they're both still sloping higher. So we are at a +3. I have my weekly outlook at a 0 because we're going into an election. We're really not looking to stick our neck out one way or the other. Let's go ahead and take a look at some potential trades here. As I said earlier, I've got one bull, one bear, one sideways, and ironically, the sideways trade was the most difficult to find. I found tons of bulls. I found a fair number of bears. The sideways one was fairly difficult. On the bullish side, this is Delta Airlines, DAL, and you can see this thing is going higher. It had a little pullback base, whatever you want to call it, but it broke out today. This candle gapped down. They bought it all day long. They were still buying it at the close. I don't see any reason why this doesn't head up to 60. I like this 60 as a target. Can it go higher than 60? Possibly, but that's where I'm going to be setting my target here. So this means I'm looking at something like a 57.60 vertical spread. You could even do a 57.59 if you didn't want to be that aggressive. Or if you want to be really wimpy, you could do like a 50, you could do a 58.56 to make it a little bit positive theta if you want to. This thing looks like it wants to go higher into the election. On the sideways, I said this was the most difficult one for me to find. Abbott Laboratories. I had to search for quite a few. And what I like about this is that we did make a new high here. Really, one candle was able to make a new high and hold it. But then we had this pullback. We tried to bounce here, and then we failed miserably. So the only question I have is this in a downtrend now? Is this going to plummet? And is this going to just tank below 112? Well, I do think the markets are going to hold in here. I don't think we see a ton of upside into the election, but not a ton of downside. I would be looking at this thing just staying in this range, this 112 to 118 area, which means 115 is going to be my target area. So on a butterfly, I'm going to be opening up at 110, 115, 120. And that means your profit window is probably going to be around 117, probably 50 down to 112.50. It's probably going to be your profit window in here for the butterfly. You're going to have to go out at least until next week, which means you're going to have to get a butterfly going right into potential volatility. That is possible. But remember, some stocks react to volatility differently. This is Abbott Laboratories. It's a big pharmaceutical company. There's really nothing on the election about pharmaceuticals here. I think this one holds in this area. And on the downside, found a really great setup with Advanced Auto Parts, AAP. Now this is in a market that's been really bullish, and you can see here, we just broke down. And again, we went down and we were selling all day long. They were still selling it at the close. I don't want to get too bearish on anything, but I do want to still have some bears. So for me, a 35.36. Yeah, it's a wimpy trade, but guess what? I'm perfectly fine with wimpy trades. A 35.36 bear call spread, either going out to the November, I guess it would be the 8th, the November 8th, or even to the November 15th. Do I want to get more bearish? I could, but again, I don't want my bears to be too bearish here because the market likes to hold things up when it's going higher. Let's talk about tomorrow. We do have some positive earnings after the bell. Here is Google. Google is currently up 4.3% after hours. We also had earnings from AMD. All right, AMD was not out by the time I looked at this. AMD is down. We also had earnings from Visa. You can see Visa is up 1.7%. All right, so look, we do have two large cap companies that are up pretty nicely, and we have one that's down, AMD. So maybe semiconductors have a little rough day tomorrow. But I think overall that this earnings report is enough to keep it more in the positive than the negative area in the markets. We do have ADP employment reports, And then I think the bigger report is the third quarter GDP. This is the preliminary number. This is the first number we're getting from the third quarter, and it's looking like 3.1% growth. That's a good growth number. Of course, we're going to get two other revisions to this, but the preliminary number is the one that people always react to. And then take a look at what's on tap tomorrow after the bell. We got Microsoft, Meta, Lilly, AbbVie, Caterpillar, Amgen. That pretty much is going to wrap up the large cap tech stocks until we get to NVIDIA. And there's going to be about a 3-week gap until we get NVIDIA's earnings. So I think this kind of wraps up earnings as we get through these last reports. That is the Market Roundup. Take care, everybody.